All right, guys, today's video, something that will actually we've been waiting for a video like this, so I'm excited to see what this video talks about. Let's go watch our trusty friends at SMB Capital. Spend about 20-30 minutes with these guys, and then we can wrap it up for the night. If you guys feel like it's time for you to call it, make sure to hit the like and subscribe if you think I deserve it, and I will see you guys tomorrow. If you want to stick around and watch this video with me, stay along and let's chat. All right.
Scalping strategies.
Whoa, turn that off. Pause. Go here. Put this one loud. Turn it down on my headphones so that way I don't go deaf. All right. So, this video over here, where is it? This video over here is talking about scalping strategies. I really want to get into scalping. I want to personally learn how to scalp better, how to scan for stocks that to scalp better, and you know, make a playbook out of it. I really want to make a good playbook of scalping. So hopefully this video can help us with that. Let's go watch it. Shout out to SMB Capital.
You're about to learn two specific scalping strategies that we trade on our desk, which helped one of our traders transform his trading and his entire trading career. This will open your eyes to the potential profits scalping can produce. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop new.
Isn't that where the Private Sully landed?
7 and even 8
Captain Sully landed in the river, Hudson River.
Learn from a professional trader on our desk so you can grow your trading account.
There are 3 key concepts you have to master if you want to effectively scalp. The first one is just pick 2 things to be great at. So picking 2 very specific things to be great at. What this meant for a trader that inspired this entire video was actually 2 specific trades. And what he found fit him best was 2 specific scalps. So that's why we're talking about scalping here. We'll get to the specifics of these exact scalps in a minute, but the key was he just picked 2 of them and then he stuck with them. So if you're asking yourself the question, what do you pick to be great at? How do I even start? Here are some common themes that you look for. So you look for something with a reason for real world edge. So why does this scalp exist based on the participants, those other traders that are involved? You also look for something with a decent number of occurrences each week. We think about 16 to 20 occurrences at a minimum. Here's why. So most traders on the desk, most professional traders actually, look for trades in about 1 of 3 ideas they actually look at. So if you look at 3 stocks, 3 decent ideas, right? They might actually only feel like 1 of those 3 actually fit their trading business. The trading business being a combination of catalyst, setup, and trade that they have edge in. So just 1 in 3. So out of that 1, there tends to be about 3 trades that they're looking at potentially for that 1 decent idea. A lot of times it's 3 different, but like actually kind of insanely similar versions of the same trade, even the same scalp. Out of those 3, most traders will only press the keys. They'll only take action on 1 of those 3. So that math shows us that for every 1 trade where we actually press the keys, there are 4 ideas that we pass up on. 2 in stock selection and then 2 in trade selection. So you need about 16 to 20 examples of a week to look at. So once he picked those 2 things to be great at, and for this trader, again, 2 defined price action scalps. But by doing this, he focused on these 2 things, and he found that he could reduce his risk per trade down to about 5 to 10% of his daily stop limit. So let's talk about 10%. By getting 10 to 20 of those scalps each week and looking for at least a kind of 2 to 1 risk reward, he had amazingly killer edge in his trading. Here's generally what it looked like for him. So let's assume a 60% win rate on 10 occurrences a week. If his daily stop's $1,000 to start and he's risking $100 per trade, again, risking 10% of his daily stop, he's making $1,200 on the 6 winners and losing $400 on the 4 losers, netting him $800 per week, which is just under a daily stop. He does that for 2 weeks and he makes a stop and a half. Time for a risk bump. His new daily stop is now $1,500. Now let's repeat the math. He's moving forward with this new stop, 60% win rate.
I mean, this is all cool, but what's the scalping strategy?
Of a stop, $1,800 in winners, $600 in losers, netting him $1,200 on the week.
He's kind of
Do that
making
for 2
it,
weeks,
making
another
people
risk off.
understand
Now
who
your stop's
don't understand this.
$2,250.
He's dumbing it down. I get it. I get
$2,700
it.
in
But
winners,
I don't need
$900.
to see
Again,
this part. I understand this part
$2,700.
very
Now your daily stop
cleanly,
is
very
5
easily.
winners of your daily stop each day.
Okay.
So this sort of risk plan was a hugely important factor
Right.
in our trader, the trader that inspired this entire video,
Okay. I got
in
that part.
accepting how powerful this sort of growth can be. And we've seen it from our desk, but we felt like it was really important to show. And even then, we still need a second key here to be able to help us execute in that way. Our second key is get your timing right.
Okay.
It doesn't get talked about enough, but all of us live it every day as traders. It really should get more focus since it's kind of one of the toughest things to get right in trading. So instead of just talk about it being challenging, let's talk about how people do specific things to get their timing right.
Okay.
There are 2 elements to timing on our desk, the things that we talk about the most. Mental capital is important to preserve and save it until there are specific opportunities that are presented.
Yeah.
The best way
I agree with that statement very much, because today, like, there were very good opportunities that came in later on in the day, but I already blew my mental capital on Coinbase, on Boeing right off the open, to the point where I was a little tilted. So me recognizing I was tilted, I kind of said, you know what, I'm not trading any of these momentum-based stocks anymore. I'm going to go to an old setup that actually has proven to make me money time and time again. I'm going to go to that old setup and I'm going to smack the shit out of that setup, and I'm going to only trade that setup all day, which helped me and also helped me not tilt for the rest of the day. But that made me give up on a lot of good opportunities, like taking that Google long back through 150, taking that 140, taking that Amazon long back through 150. So mental capital, very, very important. Gotta preserve it. If you're blowing your load at 9:30, 9:35, 9:50, 10 o'clock, then when the good trades are showing up at 10, 10:30, 11, you're not taking them because you already down on the day. Your mental capital is shot. You don't have enough confidence left. You think every trade you're going to get into is going to be a loser, right? So you got to preserve that mental capital. Very, very good point over there.
way to preserve your mental capital to get your timing right is to think about that 4 ideas to 1 trade. So you're preserving your mental capital by just not over investing in anything. There's this old quote that says, you miss 100% of the shots you don't take. It's like this really nice...
That's not Michael Scott. That's Michael... Oh, it says who it's by, and then Michael Scott wrote it again over on top of that. He put Wayne Gretzky in quotes and he put Michael Scott on top of that. How am I just seeing this? I used to see Office a lot, and I'm just seeing this. That's jokes.
100% of the shots you don't take. It's like this really nice quote, but it's actually really misinterpreted. You actually miss 100% of the great shots you don't take.
Yes.
You absolutely should miss 100% of the bad shots that you don't take. Those only set up the good shots. So in order to preserve your mental capital, just by doing this, by passing up on the bad shots, you're going to get yourself into really good shots. The more important concept, and really the one that we have to talk about the most, is your physical capital, your financial capital. And you really only want to put it to work when even more edges are present, when things are stacked in your favor. So by passing on so many other lesser trade ideas and being really specific with our entry criteria, we're given the ability to size up our trading over time because we're passing on the lesser versions of the same trades, the same scalps. And we're only taking the best versions of the best. And we're letting those really set up and trigger for us. So let's start with a very simple scalping strategy, a strategy that's straightforward and it'll showcase our point.
Okay,
here's
the fun stuff. All right, let's see it.
Here are the basics of the Bella scalp.
The Bella Fiore.
A strong in-play stock that sells off kind of quickly on the open. Now, the scalp does happen in both directions. We're only going to talk about the long here. But this strong in-play stock sells off quickly on the open. Now, it doesn't just wick down, but it actually sells off. Like when the selling gets kind of almost sloppy, like forced, It's usually really, really clear on the tape, but even on the chart, you'll see the bars that just kind of feel like they're forced lower, like it should have bounced, but they're just kind of forced lower with those sellers getting a little sloppy. What's actually going on under the hood is an aggressive order, an aggressive sell order that's just kind of looking for liquidity. It has needs to get filled, and in order to get filled, it has to kind of press lower. The best part about this is, since it's a strong stock, when that order's done, the stock's natural strength will take over and it'll revert back to the upside. So all we're looking for in this scalp is that seller, that sloppy, urgent seller to lift. Because once they lift, our Bella Fade scalp starts. The easiest way to do this is on the chart, when we identify something selling off in this manner, we just draw a trend line and we just wait for the trend line to get broken. So once we have that trend line and then that trend line break, we're actually looking for 2 waves higher. We use the tape on this, so we're actually watching that seller press.
I need to rewind. I wasn't paying attention. I'm sorry.
On this, so we're actually higher.
So he's drawing a trend line. Okay, this is a daily chart. No, it's not. I'm seeing intervals of 5 minutes here. This is a 5-minute chart. Oh, it's a 1-minute chart. Yeah, it's a 1-minute chart. Okay. So he's drawing a trend line off the open on the 1 minute.
Watching that seller press and press and press, and as soon as they lift, that's when we're entering the position. But you can use the chart as well, and you won't see the seller lift on the tape, but that's okay. You simply wait for that trend line break. And by waiting for that trend line break, before you're looking to catch those 2 waves higher, we're usually increasing our probability on the scalp, so it winds up being a decent balance there, whether you're using the tape or you're using the chart. Now, our stop for this is always 2 cents below the low of the day. We sell half into the first wave higher, that first rush higher, and pause. And then we sell the second half into our second wave higher, that rush higher, and then pause. It got its name, this scalp, the Bella Fade, got its name from Bella. He loves this scalp because it's very repeatable and it's very obvious when we get our entry. And usually the more specific the entry, the easier it is to get our timing right.
All right, let's see how this would have worked on Coinbase today. Okay, let's try to apply what we just saw on Coinbase. Go to the 1 minute chart. Coinbase did sell off right off the open, right? Like, are you telling me I'm taking this long right there? I guess so, right? Once it goes back through and my stop is right there. Yeah, I already got stopped out. Woo! Right? So I don't really know about the 1 minute line there. I don't really know about the 1 minute line there. This kind of makes more sense. 5 minute chart. You're seeing the trend go down. First green bar pop up. This is basically rejecting that trend line all the way down. Constant selling. Once that selling is done, the trend is broken. Then you got a beautiful long. That looks like a good scalp. Trend line breaking. You get long somewhere over here at 148.70. Your stop is at the low of the candle. Your first lot is somewhere over here once it stalls. Your second lot is out over here when it stalls. You could think about getting back in after it creates a higher low somewhere over here instead of going all the way back down. And you have a better long up over there. Actually, could have killed the long today on Coinbase. But yeah, I got killed instead. But yeah, looks like this. I think this is the 5. No, he's doing this on 1 minute, which is crazy to me. It worked out cool. You know, the example is great, but I think I would not do it on the 1 minute. I would do it on the 5 minute.
Of a way to stack the timing in your favor.
I would do it on the 5 minute.
Define a criteria.
Maybe that's what they're kind of hiding from you, right? Because they don't want to reveal the whole information to you, right? If they do so, they're kind of ruining the edge for themselves. But they're giving you an idea over here. You make me do this on the 30 minute. Maybe do it on an hourly chart if you're a long-term trader, right? If you plan to hold your trades for an hour or more, if you plan to hold your trades for days or longer, use a day chart. So kind of get the idea that they're explaining. However, if you plan to hold your trade for a minute, you're not really trading, in my opinion. But I guess in that case, you're scalping because you don't really hold your trades for longer than 5 to 30 minutes, in my opinion. As a scalp, if you're scalping, you're in and out, quick, bang, right? Hit and run, you're out.
Wait, when that criteria is met, your timing's usually in the right place. Our third key is have a specific trade strategy. Have a trading edge. And what we really mean here is being efficient with your trading edge. So if you have an entry point that's shown up for you, right? So maybe you have one of the two scalps we're talking about.
Either that or they're lying.
Talked about
Yeah.
one, we'll talk about another in a minute. But you've picked your two things to be great at. You've defined your entries to get your timing right. But in order to really scalp super effectively, you need to have a risk point, a reasonable expected move,
Yeah, like a
and a shot clock.
like a
We're going to cover all three. So a
Okay.
risk point is
Yeah.
a risk from your entry,
like a clear low that you
on the
saw. Like
chart.
yeah, exactly. Like okay, so I'll just show you again. Like that risk point over here is that clear low where the stock has made and then bounced off of. So that clear low is your risk point. And he said 2 cents under this. How stupid would you feel if the stock went down to 146.92 and then went back up after you got in? How stupid would you feel, right? I think you put your stop at 146.89, even though you're long somewhere over here. You give it that proper risk and you get the proper reward reaped out of it, right? You reap what you sow. But according to that plan, you put it 2 cents under the last low. Get the fuck out of here. I'm not putting 2 cents under the last low. If my entry is somewhere here, like at 148, and I'm seeing the stock, 148, and I'm seeing the stock's low as 147.11, I'm putting the stop under 147, basically, yeah, probably even just 147 flat. Instead of putting 146.89, I'll probably just put it at 146.99. So if 147 breaks, I'm out of the trade. I don't want to hold it anymore, right? You get the idea. But him saying just straight up, so easily saying 2 cents under that low, they're coming for your stops if you set it 2 cents under your low. I'm telling you right now, they're coming for your stops.
Based on the change that gave us our entry. You can see in our example, the change was when that seller lift, when that trend line got broken and the low was put in just before that.
Yeah. That's
That
the risk point.
Determines our sizing. It doesn't determine anything else for us, but it helps us determine our sizing. Because in order for us to risk that $100 that we talked about with the trader in the example, we have to understand.
So basically, if you're getting in at 33 and your risk is 32.79, or he said 2 pennies, so let's say 78, right? You kind of do the math behind it. If I'm risking $100, the risk is about 20 cents over here. How much size can I take? And then blah, 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 blah. You just do the simple math.
So that risk point is going to determine our sizing. The risk
a scalp
point
can be 3 minutes or under. Trade is covered on price action, not the amount that's
we
time.
can risk 10% of our daily stop right to that risk point. Then we need a reasonable expected move to set our profit target.
Yeah.
We talked about waves in the previous example. We'll use a measured move in an example that we're going to cover in a minute. But you need to have a reasonable expected move as a profit target. The
Market's saying, Prad, can you take a look at AMD? We already did earlier on in the day. I think AMD 151 area is interesting for me. Yilmaz is asking if we can take a look at ARM. Maybe after this video, we'll think about it. And John saying, can you talk about Unity? I'm pretty sure we talked about Unity. Yeah, we talked about Unity earlier on in the day. The stock sold off on the employee news. So I'm pretty interested to see how it moves. I like the way it moved today. I do have it on the watch list. Obviously, you can rewind the stream and watch it if you're interested to see what we talked about on Unity. Unity was the third stock that we talked about. So it should be pretty quickly into the stream. Whereas AMD was at the end of the stock talk and so on. So go check them out if you guys are interested.
Is a guide starting at our risk point, connecting to our entry, and then moving to our target. And it's primarily based on the price action we saw in those first 2 points.
Right. See, he said it too. Price
The
action.
third thing that you need to have is that shot clock. And that shot clock guides our expectations. To supercharge this idea even more, we bring the shot clock in and we specifically talk about what should happen and the time in which it should happen. And if it doesn't happen, if what we're looking for doesn't happen, or the time that we're looking for it to occur does not meet our shot clock, we can use that information. We can actually risk less
I
than
agree
10%
with
of our
this.
stop, or
I
even
agree with
better,
this.
We can take a partial profit.
Like, it's not a
and
bad
move on with our
idea to
trades.
have a shot clock.
So let's put all of this together again and look at a different but very specific scalping strategy. This is, again, something used by that trader on our desk, and this changed the way he was thinking about his trading. We call this the offside scalp.
Okay, let's see.
Here are the basics. So an in-play stock moves in one trending direction. So we're looking for some sort of sustained move, either up or down. And then it sort of tries to retrace a little bit of that move and actually puts in that range. So it goes from trending to ranging.
So trending
this
to
is a
ranging.
Great idea.
And then
a
another lower
great scalp
range
to look for around VWAP. If something's above VWAP and then comes below VWAP, you can look for that scalp. If something's below VWAP and comes above VWAP, you can look for this scalp to set up.
Okay.
So the keys are the stock builds out a range with at least 2 distinct tests, either higher or lower, and another 2 distinct tests, either higher or lower. What we define by distinct tests, you can actually see in the example. So on that second attempt, or when it really looks like that range might break, in this case to the upside, we're talking about a short, but again, you can just flip the charts if you wanted to. So when it looks like it might break to the upside and it doesn't, think about the traders that are now offsides. It's
trapped.
not that gives us our trade. It's actually the response to the attempt higher that gives us our scalp. So we need that attempt higher, and then we need a response to it. So if the sellers slowly and methodically step in after that look like it might bust higher.
So do you take the break out of this?
We get a scalp that sets up as a break of the range to the
you
downside.
take the breakout.
Now those long traders that were offsides, they'll kind of rush to sell. And that rush usually gives us our ability to get rewarded very, very quickly.
But do you get in on the pullback, or
for this
do you take the breakout? Okay, you take the breakout, and where's your stop?
We risk against the highs of that
I thought
move,
so.
And we target one measured move lower, and then we just take our exit.
Yeah, so 1R.
Our shot clock tells us that we expect this scalp to play
You're
out
getting in on the
relatively
breakout.
quickly.
You're
We
trying to
expect the
take that
sellers to kind of
1R,
remain
but you
selling,
also have a shot
and they'll
clock
continue-
over here. Oh,
you wanna earn-
snap. You also
You're about
have
to
that
earn-
shot clock there for a reason, and that reason is, let me just go to that point again. Where are we? We're right over here. So you want to have that shot clock for a reason, because there's also a chance where the breakout actually happens, but it retraces back. So you want to have, like, okay, I'm going to give it 10 seconds at best for it to stay above, let's call it 286. It's not 286 because 286 is somewhere down over here, but let's call it 286, 286.50. If this stock, after breaking 286.50, is going back to 286.50, I'm going to give it maybe maximum 5 to 10 seconds to hold 286.50 on the bid and show me buying 286.50 or higher. Show me bids stepping up higher than 286.50. And if it's doing that properly, you're seeing buying coming on the tape, you're seeing bids stepping up, that's not the breakout anymore, right? There's still too much buying over here, more than the selling that's over here, and they're still fighting that opportunity. So you kind of just got trapped in this breakout. But if you give yourself a shot clock, instead of, if you give yourself that shot clock, now you take, instead of taking a whole loss of $2 over here to the north side, you can close your position much quicker and take a small hit on it and then come back to that trade later on. So that shot clock, I think that's what he's talking about when he means shot clock. So let's go find out.
Or when it really,
at least that's how we use shot clock at the office that we got trained how to trade. Not this new office that I got trained, my old office.
sellers
Greg talked about having a shot clock quite a bit.
very, very quickly.
So you got to have an expectation, and you need that expectation to play out within a reasonable time, that shot clock.
And we target one measured move lower, and then we just scalp to play out relatively quickly. We expect the sellers will kind of remain selling, and they'll continue to trap those longs. They'll press them lower and lower. Our shot clock for the scalp is actually typically about half the time of that range formed. Now, we've covered two very specific examples here, and I hope they're really bringing you a lot of value.
Half the time the range was formed?
Of that range formed.
I guess you're expecting it to go to that 1R area, right? He took the size of this width of this range. He put the same box right down over here with the same width. And he's expecting, let's say this was 7:10 to 7:35, 7:40. It's about 40 minutes. He's expecting this range to fill out in 20 minutes. If that range doesn't fill out in 20 minutes, or if it gets back above this high and it starts holding above this high easily, that should be two reasons to get out. But half the time of this range, if it starts holding above 286.50 for longer than 30 seconds, I think that's a close trade walk away. But if it's already working for you and he's expecting this range to fill out in 20 minutes, I think that's reasonable. That makes sense. Look, I'm coming from my trading experience, which is much, much younger than the guy teaching us in this video. This guy, he trades for a professional prop firm, same as I do, but he trades for a much bigger, better professional prop firm. I don't mean that in any negative way that my trade floor firm is worse or whatever. It's just these guys are the creme de la creme. They are the top of the top. Everyone looks up to these guys. So looking at how they trade and understanding some of this, I kind of want to, understand why he's not talking about, a shot clock over here instead of the shot clock for the whole range, because I think that's a point that's very key for beginner traders. If you're only talking about the shot clock for the range to fill out and not for a shot clock for this area getting reclaimed, you don't really need to take that whole $2 hit, in my opinion. Or you can, take that quick loss on that shot clock that you gave on this area and get filled at the high of the range, at which point your risk is pretty much the same, but you have much tighter risk than the breakout risk. Much tighter risk than the breakout risk. So I think there's a couple points here not being mentioned for beginner traders that should have been mentioned.
Now, we've covered two very specific examples here, and I hope they're really bringing you a lot of value. One thing we love to talk about even more is using those shot clocks for all of our trades, because it tends to be a great guide of what can happen and when it should happen. So if you want to see more information about the shot clock, go ahead and check out this video.
So you're an active trader, not doing as well as you want.
So that's all they're gonna talk about, I guess. Yeah, I guess that's all they're gonna talk about on the scalping stuff over there. Yeah, this video, as TH is saying, give it a B. Yeah, I'm not gonna disagree with that one. We'll give it a B. Good idea, good concepts, good explanations. Trend lines, breakout of trend lines, having a risk point, having a shot clock, understanding the width of a scalp range, and then expecting that same range as a 1R. And if you can get a 2R trade out of it, even better. But you gotta be realistic with the expectations, realistic with the time of the day, realistic with the volume of the stock. Is it even in play? If it's not in play, what is the market doing? Is it just ranging sideways? So including all those other things in there, helping you create a proper scalping base, a proper scalping playbook. I guess this is a decent video to start off with, but obviously you will need to incorporate all of your trading experiences that you might have grown with, learned with, or are learning at the moment. But yeah, that, ladies and gentlemen, is the wrap of today's stream. Thank you for